And everybody, good morning, good evening, give me a second. Give me a second, everybody. Are we live? Give me a second, give me a second. Yes, we are. Alright, everybody, good morning, good evening, good afternoon, students and traders all around the world. This is Mike, the FX Boss, broadcasting you live on YouTube and other streaming platforms like Teams. Happy Monday! Alright, we are here on Monday now too. Alright, good morning. John, Paul, Max, Marcus, Jean-Paul, Todd. Good morning, good evening, good afternoon. How's everybody? Monday, now we are in September, we're in November, right? Time is passing fast for everybody. It's November. Okay, everybody, never forget trading, it's a learnable skill. The goal is to bring you from zero to a millionaire trader in 3 years on average in an institutional way. What does this mean? You're first an analyst learning about the market, it's Forex course 101, and then you jump into the Forex course 202, which is the money phase, right? The advanced institutional trader course, everybody. And then we have Forex course 303, which is not for everybody, you know, not everybody needs it, and so on and so on and so on. And if you didn't receive the manual, everybody, please send me an email to mikefxboss@gmail.com. Connect on Teams, it's for free, everybody. Okay, education, FX passion, it's on, you like Olga and Shantana and Alex and Juan, everybody. You can talk to the advanced traders, some of them are professional traders. This month we are running the Learn How to Make Big Money as a Trader, everybody. Next month, I mean in January, we are going to have the, I'm thinking to maybe in December, let's see, we're going to talk in the group, everybody. Maybe we can have the crypto portfolio in December, you know. Okay, so maybe we're going to have, Olga asked for the market wave in January. Alright, everybody, and you are going to graduate from this course when you have your chart set up and ready for trading. Number 2, you have your strategy in place. Like Alex, you know, you have your chart set up and ready for trading. Everybody, Forex is for free. Alright, you don't need to go to TradingView, right? You don't need to go to TradingView and pay. You know, TradingView prices, alright? TradingView. Free plan, basic features, free plan, you know, give me a second. Let's see the free plan. Essentially, it's 14 bucks. Where is the free plan? Do we have a free plan? You know, where is the free? Oh, basic. Charts per tab, it's show, alright. So, you have charts per tab, it's 1, number of saved charts. Custom, second based, tick based, intraday, Renko, custom range, intraday, chart data, customize, interactive, bar, simultaneous chart, extended, historical, bar, replay, technical analysis, and watch list, portfolios, alerts, screener data, faster, maximum, historic bars available. Yeah, you know, you're making it difficult to be on the demo, right? Alright, so demo, it's not even worth, you know, it's... But Forex is for free, everybody, makes sense? Hello, Alex, how are you? Everybody, Forex is for free. Okay, I was just having fun, Alex, with the guys online, you know. You're going to graduate from this course when you have your chart set up and ready for trading, you know. Okay, so it's not worth it. You know, the basic package on trading, it's not worth it. You know, you cannot do anything basically, so you need to pay something, right? There is no free lunch out there. Okay, everybody. So Forex is for free. Next one, number 2, you have a strategy in place we're going to talk about today. You understand how you win, how you understand why you win, why you lose. And 3, you have a complete understanding of how this market works, so you can analyze the market and make an educated prediction. Risk disclaimer, this stream is not trading or investment advice. We are here to learn. Alright, everybody? And if you want to start with Darwinex Zero, you have the discount code FXBOSS. And That being said, give me a second. So today it's still candlestick formation. We're talking about entries and equity management. Okay, we're going to learn how to decide what entries and equity management is better for you. Remember, Japanese candlesticks are a timing indicator. Let's see if Instagram works. Now, finally, not the best, right? But Instagram is working. We need to somebody who is going to arrange the pictures, you know. Anyway, I tried J4 before, but I can't upload charts here. Everybody, you can upload. So when you save, you know, everybody, when you save, you need to save as. Okay, and when you save, you need to have, see everybody, can you see Alex? You can save on JCloud, so don't save on JCloud, save it on the computer. Hello Olga, how are you? So you need to build a folder on your desktop. Makes sense, everybody? But anyway, we're going to solve this in the lesson, okay, Alex? Believe me, the charts are there. You just don't. There are some tricks, you know. Okay, everybody, save your charts on the computer, build a folder, whatever. Okay, everybody, we're going to go to, just for this example, we're going to go to AUD-CAD. Okay, and give me a second. All right, so I'm going to delete the Fibonacci because this is going to be the market wave chart. Olga, I was talking to the other guys on Teams that maybe we can have in December the crypto course, so that in January we can have the market wave mastery course. Okay, everybody? All right. So we are on AUD-CAD monthly chart, everybody. We have the support, resistance, pivot points, and so on and so on. So the market wave now is here. Okay, just an example. I'm going to delete this and this and delete this. Give me a second. Delete consolidation. It's not relevant. Okay. Yeah, we're going to talk about everybody. The majority is going to win, you know. Makes sense? So we have a down market wave right now. Let's go first to theory. Okay, so if you have a down market structure, down market wave, then you're going to have, you know, it's going to be extension like this, right? And lower lows, lower highs, lower lows. And then it's going to push into the next retracement. Okay, and now, right? We are going to have the counter trend line break, and we are going to put a candle in here, you know. Just an example, candlestick formation in here. Okay, and tomorrow we have, give me a second, tomorrow I'm going to look in the YouTube. Tomorrow we have the classics, what's your strategy, everybody? So this is the premise to tomorrow lesson. It's for you to think about. Okay, so okay, it's example, you know, example, I am going to trade market wave extensions only. Okay, so this is the pattern, and then you have the example. Okay, I'm going to enter with counter trend line break plus candlestick formation example, right? Okay, and if you want a variable, you know, confirmed change of the STT shortened trend if you want. Okay, everybody, just an example. I'm going to trade the market wave extensions only. So basically what I'm trading this one, the yellow, you know, and I'm trading this one. Whoops, not in here. I'm trading, alright, give me a second. I'm trading this one from here to here, right? And now I'm going to trade speculation wise, you know, I'm going to trade, you know, I'm expecting the market to fall again. So I'm going to trade now the projected new extension. Olga say, I open to anything, December is also good, why to waste time? I agree with you. But you know, people, right? Oh, but it's December, I want to go on vacation, you know. Olga, you don't need to try to convince me, you need to try to convince the others, you know. So talk to the guys on Teams, you know. Okay, everybody, I'm going to enter with the counter trend break plus candlestick formation example, you know. So here is the example. So here would be the entry. If you want to see the change in the confirmed trend, then you are going to wait for two more, right? You're going to have two lows and two highs. When the second low it's a lower low, the second high it's a lower high. Okay. And now let's talk about, so this is the entry. Now let's talk about equity management, right? Now in the market wave mastery, which I give you two strategies, you know, but we need to learn Fibonacci's first, you know. Long story short, you know, I'm not going to put the Fibonacci, not yet, but I am going to enter here, you know, this is going to be the entry. Just an example, give me a second, I'm going to do it like this and like this, you know, this is going to be the entry here, you know, entry sell, okay. Now, I can, you know, we're going to talk about this one later, you know, if you want confirmed change in the short-term trend confirmed. So here we're using counter trend line break and candlestick formations, okay. Now, you can put the stop loss above the candlestick formation, everybody, or you can put the stop loss above the most recent start of extension. Make sense, everybody? So those are the two different stop loss levels that you can use. Stop loss, okay, and you can use this stop loss too. All right. Now, if you put the stop loss on the candlestick formation, you know, just an example, then this is going to be your risk, and you know, this is going to be your reward. Basically, you're going to go one per, you know, one per one and a half already. Just on the, we're talking about the A and the B, right? In the advanced course, talking about the market wave, you have the A. Okay, talking about extensions, you have the A point on the market structure, and then you have the B point on the market structure. Okay, and yes, this is a strategy, by the way, you know. So if I'm going to sell here, you know, just to go to the, from my entry point to the B, then I can see that more or less, right, you know, I'm going to go one per one and a half, right? Now, if I'm going to enter here and put my stop loss on the market wave, you know, then I'm going to go, for me to go one to one and a half, no, we're not saying right or wrong. For me to go to one and a half, you know, then the profit taken is going to appear below the B, right? It's going to happen below the B, okay? And this is not a problem really, you know, but you know, everything that happens below, in this example below or above the B, then becomes high risk, right, compared to the previous market wave. Make sense, everybody? Marcos, can you explain more, boss? I don't get it. Alright, so it's nothing new, we've learned all of this. You know, the market structure trends, the market wave goes in extension, you know, and it goes into retracement, you know, and then it goes into extension, right? And after the extension, what must come? What must come after the extension? And everybody's going to say, well, after the extension, a retracement must come, right? So we've learned all of this, that when the market breaks the counter trend line, like this, and we learned that when the market starts to change direction of the short-term trend, right, making lower lows, lower highs, back again, you know, we change the short-term trend, and so this is the new extension, the market structure, market wave, you know, and we've learned that this high, it's not relevant, it's not confirmed. We've learned that this high becomes relevant only when the market breaks the previous low. Now we're calling this the B, you know. This high becomes relevant when once the market breaks the B for 1 pip, it doesn't matter. You know, now and only now, this high becomes relevant, meaning the extension of the market wave is confirmed. Even if the market breaks the B for 1 pip, one tiny pip, and start to go back up into retracement, this is the new market structure. This is the new market wave. So with this logic, everybody, you know, with this logic, of course, that those entries in here, you know, they have a better probability, better chance than the entries when the market is over the B. Makes sense, everybody? Because it's a concept, it's not real, but we're talking about, oh, it's overextending, right? This is extension, this is what's called the overextension, you know. The more the market goes below and above in a up market wave, in a up market structure, you know, more the market goes below or it goes away from the B, the more, you know, it's overextended, so the more likely, you know, probability, the most likely is going to start to retrace. There is no right or wrong, and sometimes the market just, you know, not every single time, 7 times out of 10 not. But sometimes the market goes down for 2,000 pips even, you know, before it starts to, you know. But 7 times out of 10 is going to go what it's, you know. I mean, at least me, I never measured extensions, you know, but it will be something, you know, it's, oh, now it's the new retracement coming. So in this sense, you know, if you put the stop loss above the candlestick formation, you know, in this sense, you know, you profit taking down in here, you know, it's a little bit better. I'm not talking about guarantees, everybody, but in this is the logic, right? After the bid must retrace, then compared to this one, makes sense? So the concept says that candlestick formations offer you the highest, it doesn't matter what are you trading, okay? Everybody, it's a concept. So concept, you know, candlestick formations, you know, offer you the best quality in terms of risk reward ratio. Whatever you do, makes sense, everybody? Okay. Yes, when we're going to Fibonacci is the same, right? Makes sense, everybody? I mean, you can put a stop loss also above the trend and whatever, but candlestick formation, and no, exactly, we're getting there. And no, the boss doesn't put the stop loss above the candlestick formation. I'm not doing this. Me personally, I put the stop loss on the pattern traded. Okay, everybody? When I trade, I don't put stop loss. And by the way, next year we're going to trade together for 6 months. We're going to have what it's called the virtual office. Next year is going to be crazy. We're going to trade 1 month together, 1 month pause to see how it went. Then we're going to trade 2 months together. Monday, Tuesday, Wednesday, Thursday, Friday. Monday, Tuesday, Wednesday, Thursday, Friday. Monday, Tuesday. 2 months together, 1 month pause. And then the last push is going to be 3 months together. One Monday, Tuesday, you know, twice per day setups. It's going to be a lot of fun, believe me. Okay. And yes, Marcos, the classes are going to continue normally, you know. I mean, maybe less homeworks, of course, but classes normally, extra courses normally. Extra courses are Saturday and Sunday, you know. They're not during the trading week. Next year it's your year, guys. Next year it's your year. If Raldo can make 100% next year, you can make. Can you make 10? Next year it's your year, everybody. You're going to trade in a group. You're going to see other people trading. If I make 40% next year, can you make 10? Make sense, everybody? It's going to be a lot of fun. Yeah, we never done this. We had virtual office 1 month max. This year we had twice. We had in May, we had 1 month of virtual office, and then we had in September another month. Okay, everybody? If you want, this is your strategy. Tomorrow we're going to talk about the strategy. If you want, candlestick formation offer you the best quality in terms of risk reward ratio. We're not saying right or wrong. Make sense? But if you are right, or if the market starts to fall or whatever, the stop loss on the candlestick formation gives you the best quality in terms of risk reward ratio. Like this is the example. I can have the stop loss above the A, or I can have the stop loss above the candlestick formation. It's going to take me more time, right? There is no right to, I cannot tell you what to do, I'm sorry. I cannot tell you what to do. If you are too late to the party, then candlestick formation can give you profit, but if you're late too much if you're too late to the party, then talking about, let's say that I've entered here, right? I've entered here, example, and my stop loss is on the market structure, the market wave. So now look how deep this, even if I want to profit take risk reward ratio 1 per 1.5, everybody see, it's going to be 1 and 1.5, it's here, right? So this is going to be now, I'm still safe, right? But it's going to take me much more time. Or if the higher time frame need to retrace to, then on the small time frame I'm going to be stopped out. Makes sense, everybody? You are learning this in the lessons on multiple time frame trading. The concept that, even though I'm doing everything right on the 1 hour chart, 2 hour chart, 4 hour chart, when the daily must retrace, if I would have the stop loss on the candlestick formation, I would profit take, but because I have the stop loss above the A of the market structure or market wave, then if the hard time frame must retrace, and it is going to retrace, by the way, then compared to candlestick formation stop loss and profit taking, then if I don't manage my trade, I'm going to be stopped out. Yeah, this is more of Forex course to conversation, right? The advanced institutional trader course. Okay, everybody. So think about tomorrow, how to trade, what you do. Do you want to, whatever you do, you must do it always. You cannot pick and choose. Okay? If you say I'm going to put the stop loss above the candlestick formation, then you must put the stop loss above the candlestick formation. If you say I'm going to put the stop loss above the pattern, then you must put the stop loss above the pattern. Alright, everybody? So before we go to the chart, now if somebody is going to say entry setup on the market structure, I'm going to enter with the counter trendline break plus candlestick formation, but I also want to see the change in the shortened trend. So we're going to, you're not going to enter right now, everybody. So you're going to wait for the market to give you, two highs and two lows, where the second high it's a lower high and the second low it's a lower low. Then you are going to enter here, right? You're going to wait for the third retracement, this time on the short-term trend, and this is going to be the counter trendline break that you're going to wait to enter, and here you're going to put the stop loss above this candlestick formation. Yes, exactly. It's still a stop loss above the candlestick formation on the short-term trend change. Exactly. Thank you very much. So this is going to be your entry, everybody. Okay. and instead of you having the stop loss on this candlestick formation, you're going to have the stop loss above this candlestick formation. Okay? Yes, Todd, you put the stop loss on the candlestick formation on the short-term trend. Exactly. YouTube question, third question, if I don't trade retracement, am I missing out? Can you be more specific? What are we talking about? What do you mean, Alex? If I don't trade the retracement, am I missing out? What are you missing out, everybody? So in here, everybody, talking about, see, you know, talking about the candlestick formation, now it's going to be risk-reward ratio, right? It's going to be, again, it's going to be clone, you go 1 per 1, you know, and example, clone 1 per 2 in this example, you know. And you can go even 1 per 4, 1 per 5, okay, and compared to if I'm here and I'm going to, now look at here, you know, if I put the stop loss above the pattern trade, this is what I do, by the way, you know, makes sense, everybody? Finally the question, boss, why do you put the stop loss above the pattern trade? Well, what do you think, why? Everybody, the how to, it's personal, makes sense? Different traders, different strategies, different methodology, there is no right or wrong. But long story short, to give an answer that you are not going to like, or maybe yes, because I don't want to spend all of my time in front of charts. Would this make sense, everybody? Also, this stop loss, it's safer, makes sense? Here, everybody, let's make something clear. We are not talking about right or wrong, okay? We are not talking about right or wrong. Somebody is going to put the stop loss above the candlestick formation, you know, up in here, example, you know, just an example, and the market is going to stop him out, and then it's going to reverse. So this trader is going to be stopped out and must enter again. Make sense? This is the bad news, right? So this stop loss compared to this stop loss on the market structure, market wave is safer, okay, everybody? So in this aspect, this wins. But talking about risk-reward ratio and equity management, the stop loss above the candlestick formation is better. Okay, so there is there is no right or wrong, you know, and there is no perfect strategy, perfect methodology. In down market wave, is it wrong to trade retracement? There is no right or wrong on strategies, Alex and everybody. There is no right or wrong. Make sense? But Alex, ask Mattia, ask Melissa, you know, ask all the guys on teams, you know, ask them, guys, you know, put in teams, ask the guys, I'm building my strategy and I chose to trade extensions only. Is it wrong for me to trade just extension, or should I trade extensions and retracements? There is no right or wrong, okay? But in psychology, we've learned, everybody, we learned that you cannot do all the things, right? Make sense? There is no right or wrong on the strategy. You can trade everything you want. You can trade market wave, short-term trend, Fibonacci's, golden rainbow and unicorns. It's not wrong. But how effective can you be? Can you be productive? Make sense, everybody? It's like building habits or trying to reach a goal. This is now science, alright? It's scientifically proven that if you focus on one goal, you are going to be more productive than when you focus simultaneously on 5 goals. This is now science. When you are trying to implement a habit, you are going to be more effective if you are trying to implement one habit, not 5 simultaneously. Make sense, everybody? So in this aspect, in this science, you know, should I trade and extensions and retracement and the Fibonacci and Olga, sometimes simplicity is the best way to start. It's also the best way to go. talk to the other guys. You're going to ask the guys. They're going to tell you what Mike is doing is nothing special, really. You know, it's this guy. You know, and I've told you guys. You know, like Alex, should I trade any retracement, then extensions? What is this? This is the little book of trading secrets. Is for free when you visit my website. You know, I need to make money. You know, money is a consequence of a well executed strategy that has an edge and not the reason to trade golden unicorns, rainbows, and extensions and retracement, you know. Okay, read the ebook, everybody. It's for free, it doesn't cost you a cent. Okay, there are some ways that it's okay, there are some ways that are not okay. So back to the chart, everybody. All right, stop loss above the pattern trade. This is what I'm doing personally, but I do have traders that put the stop loss above the candlestick formation. Candlestick formation offers the best quality in terms of risk reward ratio. Now you have a shorter, tighter stop, so you can capture better risk reward ratio compared to the stop loss on the pattern traded. But the pattern traded, it's safer, makes sense. It's less likely that the market is going to stop you out. Okay, so think about tomorrow. How do you want to enter? You know, do you want to enter with a counter trend line break on the shortened trend too? Do you want to enter with a counter trend line break and candlestick formation? Do you want to enter with a counter trend line break and candlestick formation at past resistance in a down market wave or downtrend? You know, do you want to have past resistance? All of those are variables. Do you want to enter with a counter trend line break, past resistance, candlestick formation, and a confirmed change on the shortened trend? If this is the market structure, the market wave, you are going to see the shortened trend on the same chart. If you are going to do this, if you are going to trade the shortened trends, then you need to go on the smaller time frame to see the change in the shortened trend. We've learned all of this, everybody, right? We've learned all of this in the previous lessons. If this is too much for your brain right now, some of you are new to the show, watch the previous recording, start to watch one recording per day. Okay, everybody. So those are the variables on the entry. You can choose patterns, you know. Equity management, how are you going to do it, you know, risk reward ratio. Now if you go on the chart, right, let's see here, well, maybe not the monthly, because we don't have the change in the short. Let's go to the weekly, everybody. Weekly, and out the text, not relevant, Fibonacci's out. This is now the market wave chart. All right, market structure, market wave, out the Fibonacci's. Fibonacci, give me a second to find, there you go. Fibonacci's out. And this is EBOOK weekly chart, everybody. You know, and of course extension, retracement, extension. Let's see which one is the highest high. Readjusting already, everybody. So extension, retracement. This is the new retracement, and then the new extension goes down to here. If I'm not mistaken, you know, there are no higher highs, higher lows below this point. Or maybe it is higher highs, higher lows. Is there higher highs? Low to, oh, we have it. I almost made a mistake, everybody. You know, this is higher high, higher low, and then it's lower low, lower high. Give me a second. Let me check if I did make any mistakes, everybody. Extension, retracement, extension. So far, this would be the retracement, right? Boss, can you go slower? Yes, of course. Always there, right, everybody? Market structure, concepts, charting, right? Douglas is going to chart in a group. Okay, so what we are looking for, everybody, we are looking in the change, we are looking for the change in the short-term trend, right? To be a retracement, to be a valid retracement, you must have two lows and two highs, where the second high is the higher high and the second low is a higher low. Okay, everybody? So, and high to low, so from here to here, right? Extension, then you go high to low, low to high. Can you see it, everybody, here? And this is the lowest low, right? Okay, everybody? And then the market made the new higher high, higher low, so higher high. And now this is the higher low. I need to readjust higher high. This is the now this is the short-term trend, everybody. The red is the short-term trend, right? Give me a second. Higher high, and then it broke the short-term trend, right? It went to high to low, low to high, high to low, 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 not a high, low, not a high. Now this is the short-term downtrend, right? So this is the new extension, and now we're looking for a retracement. So changing the short-term trend. So higher high, higher low, you know, not a high, higher high, higher low, higher high. All right, and then the new extension, right? Lower low, lower high, lower low, whatever, you know, in between. So this low, it's lower than previous low. Okay, everybody. So now that you are charting, right, you must make sense of market structure. So it goes extension, retracement, extension, retracement, extension. Agreed? We've learned all of this, everybody. I don't want to spend time. Okay, we've learned all of these, the concepts, you know, the next low must be a lower low, right? So then the retracement came along, right? And it broke this down market structure, right? Because this high up in here, you know, it's higher than this high. Agreed, everybody? So now I have an up. You can chart if you want, but not to waste time. You know, you have an up extension leg, right? But then as you can see, the market broke again down, making lower lows or highs. So now you have a down extension leg again, right? And this down extension leg goes until you find the market making higher highs, higher lows, which is in here. And you cannot pick and choose, everybody. Low to high, high to low, higher high, higher low, higher high. This is a retracement on the market structure or the market wave. So now it's down, it's here, right? This is the new extension here. Give me a second, green, okay. So long story short, do we have a bearish candlestick formation in here? You know, this will be the example, right? And remember, you're learning a concept. You can go on the 1 hour chart, 2 hour chart, it's all the same. So this would be the counter trend line break, everybody, give me a second. You know, this will be the counter trend line break. And this will be the aggressive one, not this one. And where we are here. Now this will be the aggressive one, right? And example, is this, everybody, is this a bearish? Do you have a bearish candlestick formation here, the 1, 2, 3? Remember, we've learned how to spot, how to identify. This today, it's still a lesson on candlestick formations. 1, 2, 3. Is this a candlestick formation, bearish candlestick formation? Yes or no? But remember, yeah, you need to wait. Thank you very much. Exactly, everybody. Do you what? Give me a second. Is this a candlestick formation to everybody before this one? Was those two? Is this a candlestick formation? 1, 2, 3 if you want. Alex says yes. Alex was talking about this one, you know, but the prior to, right? Is this 1, 2, 3? Well, you don't see the white, right? You don't see the bullish candle. Back in time, the market was like this. Should you have entered the market going short? Yes, everybody, like always asking, when you don't see the future, you must readjust. If the market breaks the market structure, yes, you must readjust. But when everything aligns back to up or down, then you need to readjust it too, right? Shall we readjust the market wave? Yes. The answer is yes, Olga. The answer is yes. Okay, you must readjust, yes. Okay. Everybody, this is a candlestick formation, but you should not enter because from the variables on the strategy, do we have the counter trendline break? So if you would short the market in here and put the stop loss above the candlestick formation, you know, you would be stopped out, right? But once the market breaks the counter trend line in this example, you know, it went down and down and down, right? So you would win. It doesn't really matter if you would put the stop loss above the candlestick formation, or you would put the stop loss at the most recent relevant high. Okay, so the next one, right? The next retracement, no brainer really, you know, is this a bearish candlestick formation? You know, and talking about counter trend lines, right? Counter trend line, this would be one counter trend line, and this would be the second counter trend line, right, everybody? So if you would, if you would short this candlestick formation, you would lose. If you would trade this candlestick formation, of course, when the time comes, you don't see the future. If you short candlestick formation without the counter trend line break, who remembers the concept of the candlestick formation? If you short a bearish candlestick formation without the counter trend line break, what are you really shorting? Let's see how smart you are, everybody. Boss, can you repeat the question? If you short bearish candlestick formation without the counter trend line break, are you shorting bearish candlestick formation in a downtrend, or are you shorting the bearish candlestick formation in an uptrend? Let's see how smart, and I told you too much already. I would say yes. I would say all the traders or the analysts use counter trend line breaks. It depends how you're aggressive. Exactly, this is your learning probabilities. The more convergences we have, everybody, if you have a counter trend line break plus candlestick formation plus at best support or resistance, you know, plus the change in the shortened trend if you want, all of this is going to increase the probability of your trade. Uptrend, exactly. So that's why the previous two didn't work, and this is now the third one. You should wait for the counter trend line break, right? And here you would freak out, right? Because you would have the stop loss up in here. Some of you guys, you would have the stop loss up in there, and now the market is going against you, right? Now the market is going against you, the market is in here, and it's going even more further, you know, you would freak out up in here, which is normal. That's why we told you the market is going to retest candlestick formations 80% of the time, right? What's happening in here? Nothing. This is normal market behavior. Up in here you would freak out, you know. And from theory, right, from the picture we just started this lesson, if you would if you would like to see the confirmed short-term downtrend, right, you would need to wait like lower lows or high. So this would be the change in the short-term trend, high to low, low to high, and high to low. Then this in here would be your next entry, you know. So you are trading the short-term trend, and stop loss goes above this candlestick formation on this short-term trend. Remember, everybody, we were talking about, and we were talking about here. We're talking about here, right? So this will be one entry. You know, you don't have a change in the short-term trend yet. You have just the first low. You have the counter trend line break and the bearish candlestick formation. But if you want in your strategy confirmed change on the short-term trend, STT stands for short-term trend, then you would wait for the market to give you two lows and two highs, where the second low it's a lower low, the second high it's a lower high, and you would enter on the next one, you know, on the retracement on the short-term trend, which is this one, right? Here you don't see the future, of course, but just comparing. So this is the stop loss on the candlestick formation, you know, example, shorting the market. Otherwise you would have the stop loss on the market structure. Make sense? You're shorting an uptrend, exactly, uptrend, exactly. Okay, everybody, so now we are down in here. Let's see, same story, you know, same story, candlestick formation, counter trend line break, you know, up in here, you know. And then what happened? Talking about market structure, give me a second, everybody. The market broke, right? So we have on the weekly we have extension, retracement, extension, and then the market broke again. You know, let's find the most recent market structure, everybody. High, this is not a low, and give me a second, out this one, out this one, out this one, out this one. From the weekly we're looking to see higher highs, higher lows. This is not up in here high. So this is now the extension retracement market structure. And give me a second, everybody. Out with the Fibonacci's, out with the Fibonacci's, out with the Fibonacci's. So this is the new, see the change in the short-term trend, lower low, lower high, lower low, lower high, lower low, lower high. You know, this is the change in the short-term trend. The market made a new low. See, everybody, just for one pip or two, extension. This is the new retracement. That's the new extension. This is the most recent market wave. Okay, everybody, on the weekly, the yellow one. The yellow one, everybody, is the most recent market structure on AUD weekly chart. Can you see it? And this is then the short-term trend, higher highs, higher lows, and that's not a higher high. Here would be higher high, higher low. This is then the short-term trend, right? We're in a new retracement. Okay? Okay, everybody, so think about tomorrow. How would you approach the market, you know? It's now the right time to short the market structure on AUD weekly chart. Everybody, what's the answer? It's now the right time to short. This is the counter trend line break. There is no right or wrong, everybody. Okay. By the way, you do have a bearish candlestick formation. You know, is now the right time. Talking about, I mean, there is no right or wrong. Talking about probabilities, right? If the market is going to fall, then at least me, I'm going to put the stop loss above up in here. Alex says, no. Sir, on the green market structure, the last retracement I see bullish white candle. Should I close the trade or stay in? That's on you. I cannot tell you what to do, everybody. Make sense? That's on you, guys. What should I do? I don't know. You need to find your own way. You can copy strategies, you can talk to other traders. Lastly, you need to find your own way. You know, Olga says, no, not the right time. Alex says, no, exactly. And what you don't like, beginner students and beginner analysts, is the understanding that on the weekly chart, the market must break this low to signal the change in the short-term trend. That's the low. All right, everybody? Yeah, me too. You cannot pick and choose. See, everybody, why beginner analysts that are not traders lose? The market is going to, this is a concept, it happens on all the time frames. The market is going to make lower lows, lower highs, lower lows, lower highs, and you are going to short the market in here, example. You're going to short the market in here. As soon as you short the market is going to go up and it's going to stop you out. But why? Because you are shorting past support of the uptrend. But the market was going down. Yes, the market was in an up retracement on the red. Becoming a good analyst means that you are spatially skilled. Talking about your brain and your eyes, you're spatially skilled for you to look at the yellow lines and look at the red lines, and you're able to select. Makes sense, everybody? As a good analyst, you are not mixing apples with bananas anymore. You're looking at the chart like me, and you clearly understand what is what. And this is a skill. You just practice, practice, practice. You know, we've learned those concepts too. Just because the market's making lower lows, lower highs, it doesn't mean automatically that you are in an extension and the market changed the trend. Not all of highs and lows are relevant. You've learned all of this, everybody. Make sense? This applies to daily chart, 15-minute chart, 1 hour chart, 2 hour chart, whatever chart. Is the understanding that, oh, I must chart in the right way, and this is the low on the weekly example, you know, to understand that, oh, now this is the change in the short-term trend. Otherwise, until here, it's just a retracement. And then start the drama, you know, because but I don't like it. You don't need to like it, you need to obey it. Make sense, everybody? Okay, our time is up. See you back tomorrow. Tomorrow, everybody, bring your strategy to the table. All right. Tomorrow we have what's your strategy? With this beautiful guy, right? Okay, bring your strategy to the table. Tomorrow we're going to talk about variables on the strategy. Until tomorrow, stay strong and study the charts like a boss, everybody. Never forget you're the boss of your own account. This is the boss signing off.